All right, stocks have hit a bear market, but what does that mean? Here to answer that question from Wilsey Asset Management is the president and CEO himself, Brent Wilsey. Brent, good morning.
Well, good morning. Good morning.
The difference between a bull market and a bear market, and
Well, yeah, let me give you
right
some bad numbers here, first of all. Year to date, the S&P is down about 24%. In September, it was down 9%. NASDAQ year to date down 32%. In September, that was down 10.5%. A bear market is when you are down more than 20%. So the Dow, the S&P, the NASDAQ, they're all in a bear market. Just for informational purposes, a correction is only 10% or more. We're now in a bear market. Now, what I always tell people to know this time is invest in quality. And a lot of times I say that. But what is quality?
Yeah.
You want to look at your companies. Make sure that you're not overpaying for the earnings of that company. Make sure they don't have a lot of debt. Make sure that they have what we call cash flow. And if you're in a 401k, check the 401k. Don't just look at the name of the investment. Look into it. What do they hold in that investment? And do not be in bonds during a rising interest rate environment.
bonds are what we want to avoid right now.
We want to avoid them now because of rising interest rates at this point in time.
Okay, so people are looking at their 401ks and they're going, holy cats.
Yes, yeah.
I'm getting taken out by the woodshed.
Yeah, and what I want to explain to people is that we're now, because inflation came along, the Fed raised rates very quickly. Now, if you go back to 2018, and 2018 for the year, we were doing pretty good. We were probably up. December, market dropped 15%. Oh my gosh, we're in a rising interest rate environment. People panicked, they sold, and they got out. If you went to just the following year, February 22nd, from that period, December 26th to February 22nd, the market moved back up 19%. And that year, I think we were up about 25% that year.
Okay.
So what you want to do is don't panic and pull out. Make sure you understand you have quality, but look to see what you have, and you do not want to time the market. We go back 15 years. In 15 years, if you just missed, there's probably about 5,000 trading days. If you just missed the 10 best trading days, your performance would have been, if you stayed the whole time, you'd been about 10.6%, $10,000 would be about $45,000. If you missed just those 10 best days, it was cut more than half. Your return's about 5.1%, or your return would only been $20,000.
And you never know when those 10 best days are going to come.
Never do, and I got some here just to kind of give you, and people say, oh, that could never happen. October 2008, 2008, one day, the market moved up 11.6%. October 28, 2008, up 10.8%. Even as recently as March 24th, remember the pandemic?
Yeah.
That day, March 24th, 9.4%. Another one, April 6, 2020, it was up 7%. You cannot time the market. I think you have a better chance of winning the lottery than trying to time the market. And it feels so good when you pull out. Oh, I'm out of the market, I feel much better. But you will miss those days, and it will hurt your long-term performance, but you gotta invest in quality.
We have the midterm elections coming up in November. What does that mean for investors?
Well, what it means for investors, there's going to be some changes. And actually, going back in history, whenever you have the House, the President, the Senate, all the same party, it's never good for the market. We do need to get that mixture back. We need to get some mixture, and that is when it does the best. So we are hoping to get, either the Senate or the Congress, something to change, because that is good for the market long term. A mixture is better than all of one party.
All right. See any seminars coming up?
We do in November. We don't have the exact date yet, so we do have it up on our website. You can sign up for it, but we'll give you more date. We're trying to time it with the election and the holidays and everything else.
Right.
But the website is smartinvesting2000.com. Again, smartinvesting2000.com.
And the newsletter's always there. So.
Yeah, the newsletter, we get a lot of comments on that newsletter because it's about 3 to 4 minute read, and it really gives you good information about the economy, investing, finance. People just love that newsletter.
Yeah, all right. Brent Wilsey, Wilsey Asset Management. Thanks a lot.
Thank you.